Welcome to Good Vibes with Emeka and David. Today, we're going to be talking about the property market in 2025 and 2026, what the outlook looks like for the remainder of the year, and what's to come in the first and second quarter of 2026. Welcome, Emeka.
Thank you. Thank you for having me, ladies and gentlemen.
Mostly, if you're a first-home buyer, there's so much more information we're going to share today that will help you take advantage of where we are right now in the property market, take advantage of the rates, where the rates are potentially going, where we're finding you will find some golden gems, some affordable properties to buy and make your first home. And as an investor, we're going to share some tips on where we're seeing capital growth going and where much locations are going to see much more growth over the next 4 months and also in early 2026. Ladies and gentlemen, Emeka.
Boom. Hey guys, nice to be here. Thank you for having me today. So a bit of background on myself. I'm a real estate agent based in Redbank Plains. So I'm here to share some insights as to what we're seeing in the market. I'm an investor as well. Obviously David is too. And where he comes in is he's a buyer's agent. So he's going to give you guys good insights of what we're seeing on the buyer side. But just like I'm an expert at sales, he's an expert at helping people buy. And so there's always a good mesh there and it makes for some pretty interesting conversations.
100%. Now, we've seen rates go down. They've slashed rates 3 times so far this year. We've seen also from a stock level, we're going to talk about that, how much stock we're finding in the market and what's causing that to happen, especially here in the Brisbane market. Believe it or not, it's happening countrywide. You know, I'm originally from Melbourne and I'm seeing the same trends. There's not much stock on the market. So we're going to dive into why that is happening and how that's benefiting, potential first-home buyers and what that means, especially for investors. And we're going to talk, much more about housing deposits and how to actually tap into these advantages and which hotspots we're finding much more growth over the next 4 months. And let's call it 2026 as well. Also,
the Melbourne market's a cooked market, so let's not talk too much about Melbourne.
I tend to disagree on that. I do believe Melbourne is the future.
Yeah.
Brisbane is essentially the past.
Melbourne's looking like the past right now, I'm telling you that much.
Well, it does definitely look like the past. If we factor in where Queensland was 8 years ago, right? Like, that's essentially where Melbourne is right now. So yes, we are in the past. We are just a few years behind where Queensland is right now at present. But I do believe as investors or the buyers that I do speak to, we speak more about diversifying. I've invested in Queensland, in the Queensland market. And, my purchase price was under 500.
100%.
I can put my place on the market for almost double that amount right now, right? So essentially what I'm seeing happened in Queensland, those same trends that happened just before COVID and just after COVID are the same trends that I'm seeing happening in Victoria right now. So talking about the infrastructure, talk about the population, looking at both international migration and local migration as well. I'm finding so much similarity between what's happened there and what's coming into the Melbourne market right now. So hence why I'm saying Melbourne looks like the future. At least it looks promising for the next 24 months. That's
fair. I think with the kind of changes in the laws that we've seen in Melbourne, it's made it a lot more difficult for people in Melbourne. Would you agree? Or?
100%. 100%. I'll first speak to, just local government stamp duty. That's, let's address the elephant in the room, right? Everyone's complaining about stamp duty. Everyone's complaining about land tax. Everyone's complaining about all these outgoings, all the tax you need to pay if you're either an investor or even some first-home buyers are feeling it too in the Melbourne market, especially talking to the land tax. Well, the way I look at it is, if you look at the past, 3 years ago or 2 years ago rather, there was an outcry that Melbourne investors are leaving Melbourne. What I found was, because I've been heavily involved in the Melbourne market for, over the past 8 years or so, what I found the trend was Melbourne just before COVID, where we were finding prices there were all under 500. So any location, Werribee, Tarnate, even some inner city suburbs like Docklands, you could still get a 2-bedroom apartment under 500,000. So what happened then when prices were relatively lower and there were slashing rates, a lot more people had more borrowing capacity. So investors went into Melbourne and bought 3-4 properties. Well, at least in my experience, most of the investors I was speaking to would buy one in Wyndham Vale, one in Tarnate, one in Craigieburn, and then they'll get an apartment in the city. So what then happened was, when the land tax was increased, it meant that if anyone had more than 2 properties in Melbourne, if you were paying $2,000,
They cooked.
automatically went to $8,000 overnight.
100%, yeah.
Any smart investor will choose to leave. And then factoring in the fact that rates were also increasing as well. And rental income was not as high as it is right now. A lot more people, it was smart enough for them to pull out. So
Yeah.
that's what happened to Melbourne. It wasn't because every investor that owned one property was just like, hey, let me jump ship.
Yeah,
Yes,
yeah.
some did that. But if you look at the actual numbers, it's people that owned more than 2.
Yeah.
Most likely they sold 1 because they just couldn't hold, long term. And that's where I qualify what a successful investor and a non-successful investor is. Most non-successful investors sell too early. There is an economic change, 1 or 2 things change, and they want to jump ship. Whereas successful guys just know how to hold on. They plan well enough to be able to hold on long term until they see the double increase in valuation on the property.
Yeah. I guess there is a lot of speculation that goes on. And I think what you're talking about there is people cashing out because of the fear of losing unrealized gains. Is that what you're kind of talking about?
That's correct. That's correct.
Yeah, Melbourne, personally, I think it's cooked. But at the same time, I do understand from the standpoint of if people buy back in now, when the prices have dropped and teetered off, then, if the market rebounds, they're going to be set for a tremendous amount of growth. It's like the opportunities had kind of begun to run out. Is that fair to say?
100%.
Yeah.
100%.
So there is a lot more opportunity in that place at the moment. I think what I really find attractive about the Brisbane market is, for me, Brisbane is a very unique city. Not just because you have Brisbane, but you've got Logan, you've got Ipswich, you've got, Redlands, you've got Moreton Bay, all that kind of stuff. So you've got so many other surrounding areas that really feed in the attractiveness of this location. And then you've got the Gold Coast, you've got Sunshine Coast as well, which for me, not just with that, but the improvements in the infrastructure, etc. And then this is kind of what we wanted to talk about as well, why it is a good time to buy. And I think we can head towards that part of the conversation. I would say getting into the market now, just as you were kind of leading to before, is critically important. Because whether it is Brisbane, whether it is Melbourne, not only the government policies, but also what's happening nationwide in terms of rapid acceleration in local infrastructure, etc. You can see that Australia is really trying to push itself forwards. Now, we're obviously not China and we can't build roads in a day.
Absolutely.
But at the same time, we are making progressions. We're making movements forwards. There's a lot more infrastructure coming to Ipswich, etc. Area needs a lot more work. There's no denying. Trains, etc. That intercity connection, we're not quite as good as Sydney, etc. But I think that with where the market looks primed to go in Brisbane, there isn't a better time to be investing in this area.
But now,
What are your thoughts on that?
absolutely. Like I said earlier on, that I've invested in Brisbane as well.
Yeah.
The reason why I'm not selling even after realizing, double growth on my asset is I'm looking into the future. And I'm seeing, yes, there was infrastructure spend being announced back then.
Yep.
But even now, there's still more new infrastructure that's been announced to come further on.
Yep.
And we're also seeing even the population booming as well.
Yep.
If we look at an international migration point of view, right? Yes, 60% of people who come into the country go between Sydney and Melbourne.
Yeah.
But then what happens locally is after they've lived in these places, the biggest gainer of population is always going to be Queensland. The weather is better here, the lifestyle is better, price point.
The people are better. No,
You can argue that. But that's also true, right? Like lifestyle, prices, you can purchase a house here you can still get into a good suburb like here. You'll give us an update on that, like where we are right now.
Yeah.
You can still get into this area around 750. Whereas if we were to put this area in like Sydney, that's $1 million plus, $1.5 million plus, right?
$1.5 million+.
Essentially, you find that prices are still much, much more affordable here compared to most capitals, except if we're talking about Melbourne. Melbourne is the cheapest right now. So Queensland is always going to be attractive. We're not even mentioning the Olympics yet. So for infrastructure 100%. And population and just general incomes wise, they're not so far off from Sydney and Melbourne. So yes, Queensland will always do well in that regard. And that's what I'm looking at. And I'm seeing, even for my asset, I'm saying I'm going to hold on even longer. I'm not going to sell now because there's much more to see from a capital growth perspective. I don't know if you agree with that.
Oh, 100%. I would say the capital growth that we've seen has been phenomenal. We can talk about prices now, but I think the most compelling thing for people listening would to just know about prices 2-3 years ago. You talk about, 2-3 years ago, you bought for sub 500,000. 3 years ago, I bought a property for just over 500,000, right? And that property, if I was to get mid sevens for it, I'd say it sold pretty cheaply.
Oh, wow.
Which is absolutely insane, right? And that's like, no one would have predicted it. Yes, we knew growth was going to come to Queensland. It was always the state that, I don't know, at least I felt was quite undervalued.
Yep.
Bit of context, I was living in Canberra before. When I made that decision to purchase property, I was looking at buying an apartment in Canberra that was about 50 minutes away from the city. And that was for around 500,000. It was a 2-bedder.
Whoa.
And I was like, I can go to Queensland, be 45 minutes away from the city, and get a 4-bedroom house.
Yeah.
I'm moving to Queensland.
So are we saying a house is a better assets compared to apartment?
Hey, that's hey, don't get me in trouble. Look, to be honest, why? So right now, very controversial take, but I really truly believe that Brisbane is, and Queensland as a whole, is Australia's strongest performing market because both for units and houses, we're seeing tremendous growth.
100%.
Normally in Sydney, you'll see tremendous house growth, but you may not see the unit growth that you're seeing in Brisbane. And then Melbourne is the same as well. Whereas, last year, towards the end of the year, we were actually looking at units outperforming houses. The Star, I don't know if you're aware of that, but the Star in the city, there was not a single apartment in that building that sold for less than $1 million, which is absolutely ridiculous.
I've heard of that.
Yeah. So historically, the advice you would know from your parents and your family, anyone who invests or has people in property, don't buy an apartment, don't buy an apartment.
Yep.
Whereas now we are seeing that apartments are quite viable and they are good options.
100%.
It depends on what you're getting. So it's not just the fact that it's a house or a unit. One thing that I'm always looking at when I'm buying is how many rooms are there. Because the more rooms you have, the more flexibility and the more attractive the property is going to be.
100%.
We're in a 7-bed property right now. Not everyone can buy a 7-bed property.
100%.
But at the same time, there is no denying that if this property was 4 bedrooms on the same block of land, it wouldn't get the same price.
I hear you on that.
Does that make sense?
I hear you on that.
So when I'm looking at buying, I'm not just thinking, okay, cool, is it a 3-bed apartment or whatever? The main thing for me was I get 2 extra bedrooms. Now, my plan was to have this property, maybe live in it a bit and rent out the rooms around me, which I did for a while. Does that make sense? So from a cash flow perspective, obviously, if I can rent out 3 more rooms, buy at the same price, then I'm able to receive a lot more income. I would say houses are definitely still the way to go because obviously you're getting a larger land component and that's the one thing that we can't really get away from.
That's true.
That's the truth of the matter. But at the same time, you would probably know as a buyer's agent as well, there are some really good hotspots where you can pick up a unit at what may look like an expensive price now, but come 10, 15 years, you'd be laughing. So
yeah, I mean, I'll speak to that as well. Like in Brisbane, it's probably one of the few places, especially like in the city, that you see apartments doing well compared to houses. Like it's very, very rare and it's unusual. And traditionally, like you say, there's only a handful of people that will pick an apartment over something with a bit of land, especially if they're migrant, unless if they're coming from a certain part of the world where they're used and exposed to apartment life already. I find with most of our clients are migrants, obviously, but migrants from Africa, all right, Africa and also South Asia. Now, you find that anyone that comes from Africa or came from Africa, naturally they gravitate towards something with a bit of land. And I'm not talking 300 squares either. They want 1,000 squares and above, right?
No,
and that's more to do with us being raised on big blocks of land too. And we understand the value in land. But it's different when you come overseas into a country like here. Right? Now, how many houses are we supplying in a year? There's not going to be enough houses, which leads me to my next point, which is just price point sensitivity, right? A lot more people in high interest rate territory, a lot more people's borrowing capacities were just chopped off. Right? So you find a lot more people are sitting between 450 to 650 borrowing capacity wise. Now, if I were to give you a budget of 650 right now, obviously this area is probably out of conversation if you're looking for a house. So you might have to find an apartment or a townhouse elsewhere. So that sort of made more people more comfortable with buying apartments and townhouses
100%.
Because really that's the only option there is there. But in certain places, like you were saying, in certain places, apartments actually outperform. Now, going back to where I'm from in Melbourne. it's very common knowledge that apartments have not done so well over a long period of time. And I think it's a supply issue. And the reason why I'm saying that is, at any given point in time for the next 3 years, we're going to see more than 1,000 apartments being brought to market. Obviously, that's going to affect our valuations. But I do believe there's going to come a time where that supply is going to get chopped off. Now, whether that's 5 years from now or 10 years from now, these apartments are going to start doing okay numbers in terms of growth. And it's just, if you buy now, are you able to hold on until you realize that gain? Because that's the whole point, right? So I think, Brisbane apartments do well. Houses, amazing. If you're looking at buying an apartment in Melbourne, it has to be for a long term. You're not buying it just so you can, flip it in the next 2 years and get some capital growth. I don't see that happening. For sure.
Look, I think the important things to note and take away is we're not all knowing people that know everything's going to happen. But at the same time, everything about life and achieving property growth, etc., is all about risk and reward. So we look at people, even when we talk about buying shares, people who bought into Tesla initially, we're not thinking, oh my God, I'm going to be a billionaire, I'm going to be or whatever, But they rode through that wave that you're talking about, and then they got a really good outcome towards the end. I think with Brisbane, just to go back to talking about Brisbane and why I think Brisbane is really, really good to look into, and why, once again, it's looking at the trends rather than looking at, as you've been talking about, what is happening right now. Look at the trends. You've talked there about a supply issue, and that's a great thing to talk about. And why I think Brisbane and Queensland is really, really good to invest in is because they are doing everything they can from a government standpoint to increase and permanently increase demand. I think 100%. They're doing more than anyone else.
100%.
With the new boost to buy scheme, the first home buyers scheme as well. 30,000 now. 30,000, But then the first home guarantee scheme, they keep changing the names every single damn year. But the first home guarantee scheme now is moving up to $1 million, where you need 5% of $1 million to be able to buy a property.
Wow.
There's a boost to buy scheme that they're bringing into Queensland as well, where you need a 2% deposit. And the government will guarantee you up to 25% equity for existing homes and 30% equity for new builds. That's going to cook the market.
Wow.
So that is why I'm saying when we look at analyzing trends and what to expect, and, once again, anything can happen. Everyone keeps talking about a housing crash, all that kind of stuff. We kind of talked offline about it before. We both don't really believe in that housing crash nonsense. But we could sit here in 2 years and have the same conversation and say, hey, guys, we were wrong. We don't know what's going to happen.
That's fair.
But from looking at the trends, etc., I think the Queensland government is silently but aggressively doing everything they can to understand that these other markets, as you've talked about, have fallen off a bit because the supply, there's too much supply.
That's it.
Whereas they keep pumping up the demand. Obviously, the boost to buy the first home buyer scheme as well
to bring more people
is
into
to bring more people, bring more people, bring more people.
All right.
Right?
So we're advising the Melbourne market to do the same, eh? we probably don't have enough money to be matching that up. But you're right. Yes, one side of it is they're doing everything they can to bring the demand into the Brisbane market. But look, let's take a look at what it's doing also to the pricing. More people can all of a sudden afford to get into a $1 million property. What's going to happen to the rest of the market? Like, what are your thoughts is going to happen in the coming year or in the coming years if they continue to pump this demand? If demand increases, because naturally, economics 101, right? Whenever demand outweighs supply, what happens to pricing? They tend to just go up in value. So who's really winning here? Is it the people that are buying now, or is it the government that's winning? Who's the real winner here?
Well, I think that the government gets a massive win, but I also think that anyone who buys now and rides that wave, and that's why I was talking before about why if I was, if I didn't have a property or if I didn't know anything about property, etc., and I was thinking, what could I be doing with my life to improve some of my circumstances? I'd be saying, I would, and I asked a mentor or peers or whatever, I would pray to God that they were telling me, hey, look, get into property, buy property and all that kind of stuff, right? A lot of people have a lot of different takes on, buying property is bad, buying property is, There are always positives and negatives to everything. At the same time, why do we see so many people from Sydney and Melbourne buying properties in Brisbane? I say that to say they got so much capital growth on their properties that gave them so much more equity so they could buy into other areas.
That's it.
Now I believe that this is Brisbane's time where that will happen, where they can get so much equity. So the people who win, to answer your question, are the people who have bought previously or are buying now. Because if you buy before these schemes keep increasing and increasing, because they've done so many things, right? They've done things like, oh no, you can actually now buy as a couple, or you can buy with your brother, you can buy with your auntie, you can buy with your dog, you can buy with whatever,
you
right?
can meet someone in the club tonight, tomorrow you can buy a house
you can buy a
for
property
5%
together
deposit.
for 5%.
Yeah.
So you're telling me that two people, what if it was, one person brings 4%, one person brings 1%? They're just sitting in a property chilling.
That's
right.
it.
Now, I know that obviously with interest rates, yes, it's not super easy. Yes, we have to understand it's not affordable. Not everyone can do it. I understand that different people have their different constraints. But at the same time, for those that can, them opening up the doors to make a lot more people be able to get into that world is going to bring a lot more growth. And so, as I said, the people who have currently bought properties or who are looking to buy now will be the winners.
Will be the winners too.
Yeah.
I do believe it benefits, especially with most of our transactions being brand new builds or house and land deals or off the plan stuff.
Yeah.
I think it benefits both government, it benefits renters, it benefits even the owners themselves as well. And this is something that I talk to even the church groups I speak to.
Yeah.
Even from a looking out for your countrymen point of view, right?
Yeah.
You buy or build one house rather. There's more than 52 companies involved in building one house. So we're talking the people that make the nails that go onto the wood, the timber. That's another company that does the timber.
Yeah.
Somebody else is paid to assemble the timber and put it onto your house. We talk about electricals. Someone makes the switches, someone makes the cables. So more than 52 companies are involved in bringing together one house. So from an economical point of view, we've already rotated every dollar 7 times by building one house. So yes, we're benefiting the economy overall, but the people that can't afford to buy right now, let's not forget about those too, right? Yes, there's a housing boom right now going on, and probably it's going to last another 3-4 years, right? The ones that can't get into, unfortunately, they just can't for whatever reason that is. But they benefit because we are building better houses for them to be able to tenant. So everyone in the economy essentially is winning by us continuing with this move of building new houses and providing better accommodation for everyone.
I think that's an amazing point. I also think that depending on the equity people receive, you could say those people are benefiting by they're getting more work opportunities and all that sort of things. But let's not sit here and think that, let's not sit here and pretend some people haven't made $150,000 in equity in a year. Those same people building the properties aren't getting.
In these areas
you know what I mean?
Sitting right now,
there's a lot of people where their equity is outpacing their wages.
100%,
So it's
100%.
I hear what you're saying though. It is good for the local economy in general, and that's an amazing point. And I don't even think I've ever heard anyone break it down so well before. But yeah, I would also say, once again, why using property as a vehicle to accumulate wealth is if you use, say you have 3 more jobs and you're a tradie and that gives you $5,000 more. If you can, and you get that per month, right? And then in 12 months, that's 60,000. If you can use that, I think, bro, check my maths. I'm terrible at maths. But if you can use that 60,000 to then buy a property, and yes, you've got more jobs building properties, but now you've also got something that's producing you equity, then it's, you know what I mean? But with these property changes, you have to be in the game, not just building the properties, etc., but you really need to be buying,
owning some stuff,
because then it compounds, right? And we didn't talk about, but when you look at even the difference between buying when you're 21 to buying your first property at 30, a lot of people really underestimate how much that can make a difference.
100%. Yeah. Well, let's not talk about ourselves because we have a bit of an unfair advantage. We wake up in the morning and we're looking at houses pretty much every time. So whenever
100%.
a good deal comes, chances are we see it first before the market does.
The market sees it.
So we tend to get a better grab. But let's talk about our clients, right? I've got one of my clients, and this is like my second client that I've ever worked with in property. By the way, they're still my client today.
That's awesome, yeah.
I've just sold one of their houses in Canberra that was an owner-occupier. That went for $1.6 million. We'll talk about the Canberra market because to me, it's I just don't understand that market, and I don't understand why those prices are like that. You live there, so you might be really good to explain that.
It's the government, man. It's the government.
Yeah?
They do. Sorry to cut you off,
No,
but
no,
they
yeah,
do.
you go.
It's the land releases they do.
Uh-huh.
So this is the thing. Everyone acts like, oh, the government, they're so stupid. Like, why aren't they helping us buy properties? They do this stuff on purpose. I'm a really strong believer that they do this stuff on purpose, right? The Canberra land releases, they release land so slowly. So there's so much scarcity.
Oh, so they
right?
shrink the supply.
Yeah,
They drip feed it.
exactly. They drip feed the supply. Like, if you look at, okay, this is a thing. We're talking about Australia, right? We just need to say, before anyone goes, oh, it's just the Australian government doing this. Commodities worldwide are becoming so much more expensive. Whether we're looking at properties, whether we're looking at shares, whether we're looking at anything. Like the value of assets is going up because a lot of people post-COVID have made money. And so now more people are reinvesting it. There are a lot more like wealthy people buying farms and all that sort of stuff.
That's true. That's true.
So the cost of everything in the world in terms of like assets wise is going up. So it's not like you could go to even Kenya and say, oh, well, Kenya wouldn't do this to us. Like, bro, it's happening in Kenya, right? But at the same time, the Australian government is, in my opinion, seems to be strategically doing different things in different pockets. Like the boost to buy scheme in Queensland. That is flipping ridiculous. You can't tell me that helps people. You can't allow people to have 2% of $1 million and you guarantee them up to 25% equity on an existing home. And this is like, oh, it's just to help you, man. And you don't realize the effect of that, what that would do to the market.
You know what they say, right?
Yeah.
If something's for free, then you're the product.
Yeah, 100%. Right? You can't tell me that you can do these really slow land releases in Canberra and you're surprised as to why Canberra, which is in the middle of nowhere and is just flipping freezing, has properties that are going for 1 point. Like, that's what I was saying. Bro, I go to Queensland and I'm getting a property in the sun that has more bedrooms and I'm chilling versus this place that's 50 minutes away, a ground floor, 2-bedroom apartment.
Yeah.
That, you know, it was off the plan as well. So it was like I would have had to wait for it to be built and all this kind of stuff. I know a lot of people are really big into building and there's tremendous value there.
It's the patience. It's the patience.
You nailed it. I just like to be, I've got it, let's go.
Yeah.
When
and
I'm
a lot
older,
more people nowadays are like that in the market, especially during COVID. When we are in conversation with a lot of our clients, right? During COVID, everyone saw builders collapse. Yeah. And that definitely raised fear in a lot of people. They were like, would rather not build. I'd much rather just get something that's already established, which is fair. Yeah. But I'm also finding like a lot more smarter builders from Melbourne are just buying the land, settling on it, building a house on top of it, and they're just selling it as a completed brand new property. We've just eliminated the risk and the fear from people saying, I don't want to touch a new build. But then again, we've got guys that are coming out, you know, on TikTok inspecting brand new houses that are making it seem like every house that's getting built is a horrible house. That's never really the case. That's never really the case.
That guy on YouTube.
The TikTok inspector.
Oh, bro, I like that guy too. Really.
I love him. I love what he's doing.
But he's doing
good marketing,
you're right?
But he puts a negative name on builds because how often do you see him say, this is a really good house?
Yeah, legit.
It's a brand new house.
It was built really, really well. The builders followed every single code.
Because that doesn't sell views, right? If we're selling views and we're doing proper marketing, there has to be something to talk about. And that's where the conversations come from. But we work with some inspectors that are relatively great inspectors. Now, they'll check the house from the ground all the way to the top and make sure this is a tip-top house. Yes, sometimes we do get some minor defects, cosmetic defects, so a scratch here, a scratch there. It's never as major as, you know, hey, the roof is leaking. It's never as major as that, which means there are some good builders out there that are doing a really good job. So we need to do as much as we can, which is part of our role as well. We don't work for the builder, but we got to give credit where it's due. You know, some of the builders we work with have been doing a tremendous amount of work to make sure that they deliver really good houses. But going back to Canberra, like, and the buyer was talking to you about. So $1.6 million is what they sold for. Guess how much they would have bought it for when they started 8 years ago?
400.
Nah, 620.
620, okay.
Right, so they've made...
What suburb?
Well, I can't mention that, but...
Okay.
But to say the least, right, we're 16 minutes exactly from Canberra City.
Oh, okay, yeah.
So that's how close it is.
Bruce?
It's only on a...
Is it Bruce?
Yeah, it's on a 400 square...
Let's go. Let's go.
All right. So he's done well. Obviously, he's
Can we
done
just take
well
a
for him and
moment
his
to
side.
admit that was amazing? No, I'm just,
I don't know how you figured that out. Maybe you know the client.
no. I used to live in Canberra, man.
Oh,
Yeah.
how long were you in Canberra for?
Like probably 3-4 years.
Did you move for career or
Yeah, I moved for career. Yeah,
when you were there, did you work for the government?
I did. Yeah.
Okay.
And that was
So-
pretty crazy that
so
you did
I'm
that to me. That was pretty crazy. I was like, oh crap. How did you know that?
I'll tell you what, about 95% of the people that live in Canberra work for the government. Whether directly or as a contractor,
Yeah,
from
yeah.
a contractor or from a contractor,
Yeah.
that's the whole thing, you
Yeah,
know,
yeah.
and the pay rates are ridiculous there as well. So I don't blame people who live in Canberra. Dead city, just high property prices and a lot of government
A lot
politics
of
going on.
disposable income.
Yeah,
that
a
kind
lot
of
of
stuff,
disposable income. Like, so it's a great place to be in if you want to make quick buck for a couple of years.
Yeah.
It's like being in the mines in Perth. That's exactly what it is like. Now, so this buyer, he also owns some stuff up in Perth that we've helped him build. And to just see how his journey has been from owning his first house in Canberra,
Yeah.
and then we go and get a second and third, you know, here in Queensland, we got his second one. The third one was in Melbourne, which hasn't gone up at all in value.
Oh, crap.
He
Did you
bought
help
it for,
him buy it?
yeah, unfortunately.
Oh crap.
Good
yeah.
location.
Yeah.
It's a townhouse
Yeah, yeah.
in Tarnate.
Yeah,
If
yeah.
it has gone up, it would have been just about 40 grand.
Yeah,
You know, which is backing up what we were talking about the Melbourne market. For
Yeah,
a
yeah,
very
yeah.
long time, it has been stagnant.
You got to just hold, man.
But if we can be in a position to hold throughout the whole negative stuff, because realistically, right, how often are we going to see properties go up by 150 grand in
yeah.
1 year?
Yeah.
That's
And we get disillusioned. That's another thing.
yeah,
You know,
and
like
that's unfortunate, especially here in Queensland, right?
Yeah, your property goes up.
A lot of our Queensland purchasers won't buy outside of Queensland because they have made so much money in the Queensland market. When you tell them, hey, there's another opportunity in Perth or in Melbourne, they go, what are you talking about?
Yeah.
I'll just buy next door and make 400-500
I want
grand.
20% a year again.
Right?
It's like-
So it sets the expectation. And it's the same thing with this guy. Like his expectations after Canberra was
Yeah.
Melbourne would do the same. But lucky he didn't look at me negative light when Melbourne didn't do the same as Canberra did.
Yeah,
It was
yeah.
just like, oh, let's buy another one. At least we have enough to hold on to that asset.
Yeah.
And up until now, he still has it. You know, he sold some stuff that he owned in Perth that did well and it was time to let go. And now he's becoming more of a developer / investor.
Yeah.
And that's what I'm seeing as a trend for most property investors in Australia. They start off with owning one, goes up in value, use that equity to get the next 2, 3,
Yeah.
and then use these 2, 3 to continue to buy each other. Would you say that is a good thing necessarily for the country, that we're seeing so much growth across all assets? Or would you say that's a negative thing? Where does that place us over the next 5 to 10 years when it comes to affordability? Because our incomes aren't going up as aggressive,
yeah.
but the property prices are, grocery prices are, everything is going up in value except for wages. So why is labor not getting more expensive, but everything else is?
I like the way you think. You think very holistically. That's a great question. In terms of how it looks for Australia as a whole, it depends. If we're seeing a lot more international investment, that's obviously not great. Yes, it's bringing money in, but at the same time, the beneficiaries are going to be taking the money away.
They take it out. They make it here and they spend it elsewhere.
Yeah. Now, we are seeing that the government as a whole seems to be trying to improve local investment. It's very difficult to say where that takes us in the next 5 to 10 years, though.
Okay.
It is good that people have a lot more options with the assets they can move into, but there are so many different factors. And why it's a difficult question is because when we talk about for the average investor, obviously that's fantastic. When we talk about your future family, my future family, and even, you know, this is when we get really, really specific, the type of parent you want to be. Do you want to be the parent that says, look, I was able to do this in the property market, but I want my kids to figure it out themselves? Or do you want to be, hey, look, I want to pass these things on? So why it's a difficult question is because 5 to 10 years, right? Anyone who has a 10-year-old now that's now 20, in 10 years is 20, they're probably going to be saying, all right, I'll start buying a house at 50.
Which is too late for a lot of people to
too
start
late.
buying.
And we're now heading into a world where we're looking at things like 40-year mortgages and all that kind of stuff. So for anyone who doesn't know, we have normally 30-year mortgages. Now, 30 years seems like a lot of time, but at the same time, a lot of people think it's pretty normal. That wasn't always the way it was, right? There used to be 15-year mortgages.
That's it.
And when 30-year mortgages came out, it was like, oh, what the hell is
That's the
this?
new norm.
But now it's normal. But to me, the idea that you could buy a property at 20 years old and you're 60 and you're still paying off the mortgage from that property.
That one house.
It's 50 is bad enough, but 60 is just absolutely ridiculous.
Which means you've got to wait until you're almost 70 for you to retire. Because you're not going to just finish working at 60, pay off the home loan, and then you go off to retirement 5 years later.
Yeah.
You've got to think about your retirement as well.
Right? And so this is the thing. If we see a lot more of this money going towards businesses, etc., that can then in turn increase wages, etc., it's great. But we also have to be smart enough to realize it's probably not going to happen.
True.
So do you understand where I'm coming from?
I do.
Yeah.
I do.
So it's such a hard question to answer because in theory, more money in your pocket, more money in my pocket, more money in Zach's pocket, more money in everyone's pockets is better. But we also know that the spread of wealth, even though, yes, you talked about, 52 companies being involved, the spread of wealth isn't happening as much.
Yeah,
One thing I do want to go back to is talking about building, which we were talking about before. And I do want to say as well, I think building especially the older you get as an investor, it is actually a really, really viable option because not only can you, if you build well, because not only can you build something that, looks good, etc., but at the same time, the value you can actually do, like there are more things you can do to differentiate a home. It's so much harder to come into an existing home and then renovate it. You can a lot easily, what's the word? Easily.
Yeah.
Bro, I don't know why I struggle with that. What the hell?
It's a tongue twister.
I'm African, bro.
I hear you.
Yeah, you could, a lot more, a lot more easily. I was trying to say easier and anyway. You can a lot easier build in equity into the home. So it's a great way to build, more equity into a home. At the same time, it's just the understanding of where is that money then going.
True.
Because if a better future for me means a much worse future for my offspring, if, I'm the kind of parent that says, hey, look, you guys have to figure it out yourselves, then,
Yeah. And speaking of that, like I heard something, I think I was scrolling through TikTok and I found this video talking about every rich person that says that I'm not leaving my kids anything, I'm passing all my money to charity. Apparently all they do is the kids will open up a charity. So the charity in conversation is the kids' charity.
Oh, wow.
So I'm not passing down wealth exactly right directly to my kids because you get taxed on that. So I'm going to put it in charity, and charities have, if not zero, very little tax that you pay if you own a charity. So that's another transfer of wealth happening there on this, under the table, but very direct to the kids. So to us, it's Jackie Chan is not giving his kids anything, but he's really, donating to his kids all of his wealth, right? Which is something that I talk to my clients about all the time when it comes to passing down wealth. First of all, the conversation is usually, what is the overall goal? Why are we investing? Are we doing this to get an investment property that has better cash flow or better potential for capital growth, so we can use the capital growth to pay off your owner-occupier debt? Now, your house you live in is debt-free. Why? Because number one, it's the most expensive thing. Whenever you get paid every month, the biggest outgoing is going to be your mortgage or your rent, right? So if we get rid of that, it sets you to have more disposable income to either invest or spend with your family. So that's reason number one why people usually buy more properties, to pay off the owner-occupier debt. But also, if you're going to pass down the house, you don't want to pass down debt to your children.
No.
You want to pass them an asset without any debt on it. And now you have the opportunity to now invest in other assets or invest in shares, whatever you're going to do with the disposable income, right? So that's usually where the conversation starts. It's what's the overall goal? What are we trying to achieve here? If it's not to build a passive income stream, it's always, I want to get rid of this mortgage. because I'm tired of it. I can't get, my hair done. I got to get half the haircut and then do the other half in the next fortnight. And it's happening, right? With cost of living increasing quite aggressively, a lot more people now have to battle between bills. Like, okay, I'm not going to pay water this month. I'll pay water next month. This month I'll pay the electricity, right? So it's becoming harder and harder for normal everyday folk to get by, and let alone build wealth. Now, if it's hard for us, I could imagine what will happen if we don't start investing, thinking about our offspring. If we don't start investing, thinking about how our kids going to get into the property market. There was once an announcement that the government was considering doing a deposit scheme for children, where every month or every year there's a certain amount allocated to your kid, more like a trust fund for children under the age of 15, that by the time they get to 20, if they choose to buy their first house, they use that as their deposit. I think that works out well, because if prices are getting too hard for us, what about our kids, man?
I think it works out well. By the time they're 20, that deposit will be 1%.
Yes, they'll still need more, but there is some sort of buffer they get. They have a foot to lean on. If your parents aren't well enough to help you get into the market, which a lot of parents are becoming guarantors now, they still have something to fall back on. Because believe it or not, they're going to still need, no matter how much wealth we pass down, they're going to still need to get by.
Well, I think one thing is clear. I don't think the Australian government actually cares about fixing the issue.
You reckon?
No, I don't think so.
Why's that?
You wouldn't bring out a boost to buy scheme and a first home guarantee scheme that are that absurd if you really cared about fixing the issue.
So the solution is not really a solution. It's creating way much more of an issue
Come on,
than it is fixing it.
Let's just be real. You work with buyers. I work with sellers. Let's do a little scenario here. I have a property. Only one person comes through the property. Do you think the seller is going to have a lot more of a think as to what price they take?
They've only got one option.
They've only got one option. If I get 50 people through a property, who do you think has more pressure on them? The buyer, right?
100%.
And the seller's just sitting there licking their lips like, damn, okay, cool.
Good fat.
Yeah, even if it wasn't the price they dreamed of, which is one thing we see in the Queensland market, sellers are often way too overpriced, not just because of their own expectations, but because of these real estate agents that gas them up and tell them they're going to get.
That's really unfortunate, eh? Yeah. Let's talk about that for a second. Yeah. Because yes, I do work with buyers pretty much 98% of the time. Yeah. But this time around, I'm working with a vendor, someone that's selling a property.
Yeah, you are. Yeah.
And a lot of agents have reached out to my vendor, the person that I'm selling the house for, and said, hey, we can sell your house for more, at least about 200 grand more than what I'm selling this house for. So with that, what does that do to the vendor that he has trusted me with their property, and then later on finding out that the price that I had given them was actually the right price? These guys were just trying to get business. In your experience, how does that affect the vendor, and what should vendors look out for when agents start to do these sort of things?
I love that question. I'm going to try and answer both your points and then my point as well, all in one. So my point about, the government pushing out more and more competition, and then your points about what vendors should look out for, and sort of even answer why agents do that.
Okay, yep.
Sales, right? You understand sales, I understand sales, we work in a sales-based industry. And ultimately, a lot of people don't know, in terms of vendors, etc., that a lot of these people don't make money unless they sell something. A lot of times, when you first meet a vendor and that kind of stuff, they might ask you, or they make comments like, I hope Bro White pays you well, or I hope whatever. It's like, well, actually, they don't pay me anything unless I sell something, right? So, So the reason why you'll get some people doing that is, hey, look, cost of living is going up. They're struggling. They need to get some business, etc. And so they're trying to tell vendors things that make them feel good to then say, hey, look, actually, maybe this person's a better option to go with. When in actuality, when it comes to selling property, you know this, I know this. If you have a good process, even if I told you could get $200,000 less than what the market says, we will be able to get the most out of the market because our process allows us to get a better result. So when I come to you, Mr. and Mrs. Vendor, and I talk to you about, hey, this is the price I would expect us to achieve. I'm not saying let's limit it there. You have to go with an agent that cares. And that's one thing that you have to look out for when you're a vendor is go with the agent who cares, not with the agent who tells you they'll get you the most. I have seen so many times a property that I've sold that is sold for X amount. 44 Kudgee Street is one example. A 3-bed, 1-bath, 816 meters squared in Redbank Plains, which needed significant renovation. I sold that property for $730,000 at the start of the year. There were properties, 3-bed, 2-bath on bigger lots of land renovated that were selling for $670,000.
Oh, wow.
There are so many agents that don't care. They just want to sell the property.
They just want to get a deal done.
I have a property in that suburb. I damn care how much the properties in that suburb go for because it affects me.
100%.
Right? And
100%.
so let's not pretend that humans aren't selfish. Yes, like there's a reason why I want to get you a better price, but I want to get you a better price so we can both
Benefits
get a
me
good
too.
outcome. Whereas some agents just want to get paid. Right? And so the difference in commission on 30,000, 40,000 is not that much.
That's really
So
not.
it's not really worth it for them to push that bit harder when they can push you harder to accept this offer early in the campaign, etc.
True,
And
true.
get scared.
True.
So if you go, and get paid, sorry. If you go with an agent that cares, they will put the time and effort into making sure you get the best outcome rather than just getting your property sold. Because when you tell me, Mr. and Mrs. Vendor, that you want the best price, how committed are you to getting the best price? Because if you are committed to getting the absolute best price, then go find someone who you know with their process and their passion will get you the best price rather than
Getting the deal done fast.
just getting the deal done really fast. Because oftentimes things that we want, we have competing priorities. We might want to get the absolute best price, but we also might want to sell the property really fast because we've got another property we want, etc. Which one is the biggest priority for you? Do you want the absolute best price? You do? Cool. Work with me. If you want to get your property sold quickly because you have to buy another property,
You
that's
accept
also
whatever that
understandable.
comes
But
first.
go work with somebody else. Because when it comes to in the suburb that I sell in and I specialize in getting the absolute best price, I'm going to get you that result. And that is the passion and the energy that you need from your agent as a vendor.
I like that. I like how passionate you are about best price. You know what I mean? It's not about how quick can we sell your house. We can sit here and put the property on the market for 30, 45 days.
Yeah.
For as long as we're getting the absolute base, that's essentially where the value is.
Yeah.
The value isn't getting the best price. Not how fast, not the highest amount right now, because it's my first time being exposed to agents doing this directly to me. I often hear the stories about, even things like underquoting, and all this. I think it's more or less, we live in a fast-paced environment these days, and I find most agents, or most salespeople rather, we're very impulsive. There's no patience whatsoever. It's how can I get to the next commission really fast, just like that. Whereas I'm taking a different approach nowadays that I'm a little bit more older and a little bit more experienced. Like I'm never in a hurry at all. Even if my buyer is putting pressure on me to say, hey, find something now by next week, I'm never in a rush. I'm always reminding them like, look, it takes time for us to get the best deal. Yes, sometimes we get lucky, we get a deal done just like that. But most times are not. The ones that are not highlighted on, it takes a little bit more longer. But the longer it takes, it's not because I'm just sitting, putting my legs up, my feet up. I'm actually going through a process, a system that I know works over time to find you the most ideal property, to find you the most best deal for you, whether it's price, whether it's location, but patience pays. So yes, I do understand prices are going up and down quite aggressively, but it's also about understanding the environment you are in. So I'm never in a rush at all these days. These days I'm very laid back. Even when I'm talking to clients, I'm not like, do it now, do it now. I'm making sure that you understand the process first. I'm making sure you're well educated first before you make a call. Because if you make a decision with impulse, backing it up, guess what? Your logic is going to kick in at some point, and you're going to be like, hey, hold on, this wasn't the best deal, right? So we might as well slow down and go through the perfect process, and we achieve the result. We'll still get there anyway.
I think one thing that a lot of people do, and it's hard to get out of, and I say people like I don't do it myself, I also do it myself, but oftentimes we look at these opportunities like new shiny toys, and we just get so attracted to them. One thing I learned in my career in the government, but also my dad used to say to me, and I even had a conversation to a client before about it today, is sometimes you see these opportunities, you really want to go get them, etc. And it's awesome, right? And so for salespeople, that's like the next commission, right? And for buyers, it's like, I really want to get this home.
That's it.
For sellers, I really want to take this offer, 100%. But understanding that just like Bitcoin, and this is how my dad told me, I used to go, oh, wow. If only I was a bit older when Bitcoin first came out, I would have been able to buy it and I would have...
For $1.
And he was always telling them there'll always be more opportunities. You don't understand though. You had that opportunity. I didn't have that opportunity. But it's like, in my life, am I fine? Yes. In my life, have I been able to do certain things? You know, when I was in high school, my teachers would tell me you'll never be able to afford a property, right? Okay, so what happened then? Does that make sense?
Yeah.
So there were more opportunities in my life that I was able to take to put myself in the position where now that's part of my story rather than I was never able to achieve that outcome. And so it can be really, really enticing to be drawn to those shiny toys. But at the same time, exactly as you're saying, if you can take the time to make sure, yes, this is a good opportunity, but do I have all the information to make an informed decision and not just an excited, emotional one, then you can be left with better outcomes.
Okay, let me confirm this. You don't work for the government anymore, right?
No.
Okay, I was going to say, the analogy I use to that is, I call it pulling bullets in your gun, and you're responsible for pulling the trigger. You know, I want to make sure that it's fully loaded and it's fully cocked, and I put it in your hands.
Boom.
Now, that's all the information, a free game I can give to you about the location, the property, what's coming in, what's going, what we see coming in over the next few years. What are the key growth drivers in that area? And you are responsible for pulling the trigger. So for as long as the budget is right for you, for as long as the location now makes sense to you and you understand what you're buying very well, what the rental will look like, etc., then and only then am I comfortable saying, okay, we've made a right decision. Because we tend to speak in a very exciting way, and people get hyped up and excited about what we're saying and how we're saying it. That it's the dopamine making the decision now, right? But the moment logic kicks in, you're like, hold on, what was that guy even saying? I was just happy the whole time. You know what I mean? And then that creates an issue. So that's why I'm like taking a step back now, understanding things a little bit more and making sure the people I'm explaining to have a clear view of what it is exactly they're buying. And then and only then can they make a logical decision. And guess what? Who's the biggest winner in there? It's them. I win if their friends know how good of a job I do, and I get to do this another time, every day, day in, day out. And that's the word I spread with my sales team pretty much all the time.
Well, I agree. For me, I'd much rather a seller is telling other people he got me an absolutely amazing price rather than he sold my property really quickly. You know, it's like, what do you want people to say about you?
That's it.
One thing I want to answer for anyone who's been waiting for me to answer this, the thing I was talking about the government and the government not really helping us. As I was saying before, with the, you know, open homes, and if I get 50 buyers come through compared to one, the government are doing a lot more things to make sure a lot more people are coming to open homes, right? And so they have to be smart enough to know that continually increasing that competition is not benefiting anyone who's struggling to even be part of that competition. Does that make sense? If you don't fix the supply issue, we're not building enough homes. We look at why, and this is another thing we were talking about before, Brisbane and the unit market performed really well here. Why? It's because they're not building enough apartments. There are not enough apartments in Brisbane to service everyone. 100%. And then a lot of the apartments that are being built now are luxury apartments that are like 1.5, 2.5, 3 mil. So the price is too high.
The market has already left you before the house is even there.
100%. So if the government was really that fixed on making things change, why would they not do everything they possibly can to have a lot more homes being built in Australia, right? How can you say, yeah, we'll give you up to 30% equity, you know, for building a home, but we'll also give you up to 25% equity for an existing home? Why not just do it for building a home?
For just the brand new ones.
Do you know what I mean?
Yeah.
But even that pushes the market up, but at the same time, it's like, cool, at least the result of that is existing homes I mean, a lot more new homes are being built. Does that make sense?
That makes sense.
Because we really need a lot more properties. We don't need a lot more
100%.
buyers coming into the market.
We need more houses.
We need more houses.
Yeah, and I look at the migration data as well, right? Like 33% of the total migration that comes into the country comes from Europe.
Yeah.
By the way, if anyone's saying it's the
Indians
blacks and browns that are taken out, well, it's really
Yeah.
not. It's actually okay. Anyway, that's the whole point of this song, right? We're not gonna get into that. We'll wait for
We
the
are
31st.
not taking over.
Yeah, I'm gonna wait for the 31st of August and then see what happens after that. But go back to this, right? It's when you look at just migration data, right? Realistically speaking, there's way much more people coming into the country. And traditionally, when people come into the country, chances are they don't have enough money and enough deposit. They might have enough borrowing capacity, but they won't have enough deposit to actually purchase something. So what that means is for at least a good 2 years, they're saving up. Especially if it's a couple, it takes way less time to save up a deposit for a house. On average, it's 5 years for a single person. For a couple, 3 years. But I'm finding now that it's only taken about 2 years for a couple to come up with a deposit, especially backing up with the grants and all these other things going around. Some builders and developers are throwing money out there too to sort of entice the market, right? So 2 years is what it takes for every migrant. So if we're taking in 1,000 people a day, or on average, into the country, so that's 1,000 new people into the country a day. How many more buyers are we going to have in the next 12 to 24 months that are now eligible for the grants, eligible to buy a house? They have the right visa, the right income to be affording these suburbs. So you'll see that we're gonna have a bigger problem. Because realistically, we're not going to be able to build the houses fast enough.
Yeah.
Even if we're going to do a modular construction where we're building houses in 2 days,
Yeah.
it's realistically, we're going to have this problem for a very long time. And I see this happening, it happens pretty much across the world.
Yeah.
You know, you look at New York, supply, demand.
Yeah.
You can't get anything in Manhattan under 10 mil. Everything's just... And that's where Sydney's getting to now.
Facts.
Sydney is going to get there. And people are still going to fight to be in Sydney. It's always going to be a trend, which means that we have a tendency of adapting, us as human beings. You know, look at COVID. You know, before COVID, you just walk into a cafe, order your coffee, or a restaurant rather. You didn't have to book in. Nowadays, you can't just get a restaurant walk into a restaurant. You got to book in first. We adapted to that. That's the new way of doing things. Transactions-wise, we used to sell, when I was selling land back in the day, I used to camp outside the developer's office overnight so that we can secure 5 blocks, and those 5 blocks is our sales for the next month. We don't do that anymore. Everything is done online.
Yeah.
We don't sleep outside waiting for blocks to be released. It's a real thing, by the way. We actually did sleep outside.
I was
and
never
camp.
doing that. I was never in the trenches like that.
Oh man, it was tough times, and these are the early days of my career. So that's how I got introduced to property, especially new builds.
Yeah.
We were in Oran Park those days. Developer will drip feed. They'll release 10 blocks. The first 10 people to walk into the door are the first 10 people that are getting the block.
Yeesh,
So you gotta get you, your wife, your cousins, for you to get ahead. That was, and we did that.
We go to church on Sunday?
We
No,
did
we're
that.
going to see the developers.
And that's what we did. We had to do what we had to do. We adapted to that. But fast forward to now, you don't have to do that anymore.
Yeah.
All you have to do is just call me and I will have a block ready for you.
Yeah.
Right? So people have to adapt to what this is and what trends are going to come into the future. Now, talking about trends, we're in Loganley, which is one of your main suburbs to sell.
No, it's not.
It's not? So
It's not. I just got a listing here at the moment, but it's not one of my. Redbank Plains is my
stealing
main
someone
suburb.
else's business, aren't you? But let's talk about Redbank Plains. What are the trends you're seeing in Redbank Plains? I mean, if you're good at what you do, you really are good at what you do, right? It's fair for the vendor, the owner of the property. Let's go back to your main area, Redbank Plains, the area that you serve. What are the trends you're seeing happening right now? Is it more new houses coming to the market? Is it more existing? Is it more developers come to subdivide? Is it more first-time buyer investor? Give us a bit of an update on your area.
Cool. So Redbank Plains, fascinating area, huge suburb. Don't really have many suburbs like this in Sydney, Canberra. I'm not really too sure about Melbourne, but there are over 20,000 people in Redbank Plains.
Oh, wow. Nice.
So a huge suburb, over 9,000 homes. So there's a whole mixture. You can have acreage in Redbank Plains, but you've also got small lots as well. You've got new builds. You've got everything, and that's part of the reason why I love Redbank Plains is because you can have a bit of everything in the suburb. One thing I find hilarious is, speaking to homeowners in the suburb, etc. They'll be telling me, the market, It's cooled off a bit. Yeah, you're right. You only had 13% growth this year. Rather than 22%.
Had a
you know what I mean?
10.
It's like, bro, 5-6 years ago, if you got 5% growth, you're like, yes. Oh my God. Look at realestate.com.au. It's worth 320 now. You know what I mean?
Yeah.
Whereas now it's like a slow year is 13%.
Wow.
Which...
We're doomed. If that's what the expectation is, we're doomed. We're doomed.
So the market there is really, really hot. It's moving rapidly. Very, very attractive to first home buyers.
Okay.
What saw a lot of growth in that suburb is the first home guarantee scheme. First home buyer scheme, as it was called at the time, was up to $700,000 with that 5%.
And it fit right in.
And it fit right in because most properties in that suburb, you know, even as of, Zach, fact check me, you can put up the thing or whatever, but as of 2023, and I hope I'm right about this, was sitting at around 500,000.
Oh, wow.
Right? So now the median sale price as of the end of July 2025 was 740,000.
Oh, wow. That's a good suburb to invest
2
in.
years.
All right, so I'll put that in my top 10 suburbs for Brisbane,
Yeah, 100%.
if not in the top 5. So you're seeing a lot of first-home buyers purchasing.
A lot of first-home buyers.
Okay.
It's the first-home buyers entering that market has cooled off just that little bit because now most prices are above their price range. But when that new $1 million range kicks in next year, it's
Then
going
that's a whole different conversation.
open it up again.
2 years ago, it was 525.
Boom.
Oh, wow. There you go.
Boom.
Wow, what a suburb.
If I didn't know that, I'd be worried about
Redbank
myself.
Plains. I've got 2 listings coming up there. He's got 40 plus. So if you want to look up for property, that's one suburb you need to look up for, but also Cole and Mecca. All right.
04, 03. No, gotcha.
Might as well, man. Might as well. All right. Let's talk rapid fire questions, right?
Boom.
We've
All
got 10 minutes to go on this topic.
Yep.
So we got to answer fast, answer quick.
Damn.
Get it over and done.
No
with.
pressure, right?
Now, hold, sell, or buy more. What's the move in 2025 and beyond?
Cool. Buy more. Use your equity to buy more.
100%. No, I do agree with that. It's all like I do believe the best time to buy is right now in the next 12 months. Whether you're buying here in Queensland, whether you're buying in Melbourne, buy more. You just the more the merrier.
I would add on to that. If you're someone in Redbank Plains that has seen a lot of growth and because of that you have a lot more equity, then I would be looking at, can you move this property into another property in surrounding areas that is obviously worth more, but at the same time is going to grow more? Because the demographic in Redbank Plains is not going to be your high income earners. But if you move even just 15 minutes away to Springfield and all that sort of stuff that are on the train line, would you see more growth by reinvesting to those suburbs? Food for thought.
All right.
Yeah.
I love that. Now, what's one suburb you'd sell today? Now, I was going to say outside of Redbank Plains because you work there.
Yeah.
It's a bit unfair for you to say Redbank Plains.
Yeah.
But what one suburb you would sell today?
Would I sell? So if I owned in the suburb, I would sell the property, right? Just want to make sure we're on the same page.
As long as it's not Redbank Plains.
Cool. I would say if I owned a unit in Newstead, I'd be selling.
Okay. All right.
Newstead, great area. At the same time, with the growth you've seen in the property, you can move
park
that
it
elsewhere. Are you not happy that these aren't rapid fire enough?
No, that was great.
Thank you, moderator.
Next one. What's one suburb you'd quietly buy and hold for 10 years?
One suburb.
Outside of Redbank Plains.
Spring Mountain.
Spring Mountain.
Yeah, and that's
how far are we from the city?
About 40 minutes out from the city, about 15 minutes away from Redbank Plains. But once again, just a place where the properties, yes, they're worth more, but at the same time, a lot of newer builds there, a lot of really, really good builds there.
Tightly held.
And it's just, I live in Redbank Plains. I own in Redbank Plains. At the same time, it is a place that is just a lot more, when you see suburbs like 40 minutes from Melbourne, all that kind of stuff that are just really nice, more affluent, that kind of stuff. So places like Spring Mountain, especially Brookwater, etc.
Like Weirvilles.
Yeah, you know what I mean? They're just those quality. I used to live in Turramurra in Sydney. Have you been to Turramurra? Like Hornsby area?
Yeah,
that kind of
I
stuff?
used to live in Lane Cove.
Yeah, cool, awesome. So those sorts of suburbs that, yes, they're far away from the city, but the homes there, they're just quality. You know what I mean? You go there, you go, okay.
I just got nostalgic.
Yeah,
I wanna move
yeah.
back to Sydney now.
Yeah, bro.
That's the good life. All right. If one suburb I'll buy and hold right now will be Newport, and I'll tell you why I'm saying that. Well, Newport is only 35, 40 minutes from the city. So it's essentially a direct equivalent of the Gold Coast, but on the other side of town towards Sunshine Coast.
Yeah, yeah.
You're buying a house on a canal. We're dating back not even 5 years ago when these were just blocks of land.
Yeah.
A block of land will sell for 500,000. In the street that I'm selling right now, 2 blocks down, they've just sold a block of land, same size, not even smaller, for just $1.1 million. This is just a block of land. There's no house on top of it. Right across
That's
from
insane.
me, there's an empty block of land that's on the market for $1.6 million. Yes, it's not a dry block. It's right direct
422?
access to the water. Sorry?
422?
That's just a block of land, no house on it.
Oh, it's block of land, sorry.
Block of land, no house on it.
1.6.
$1.6 million. A few blocks
How big
down,
is the land?
it's 400 and something
No.
squares. Hear this part, right?
Oh, God.
A few blocks down from that, just further down, there's 1,000 square meter block, direct access to water. It's going for $2.1 million. This is just a block of land. All right. Now, an area like that is already achieved great results, but I do believe that looking into the future, there's way much more growth to come.
Yeah.
If I owned the property that I'm selling now, I would definitely keep and hold for the next 10 years because there's so much more to come into that area.
You going to tell your
number
seller
one.
that?
And it's, well, they don't know. I've said that multiple times.
I'm joking. I'm just joking.
I've said it multiple times.
Don't
you
even
know.
let me sell this thing. Just keep it, man.
I've said it so many times.
Yeah,
Because
yeah.
realistically, the area is already attracting high-end.
Exactly, yeah.
You know what I mean?
And you want to be in those
clientele.
areas.
Yeah, you want to be in an area where sometimes it's not just the suburb we're buying.
Yeah.
We're buying also our networks, our neighbors, the schools there,
Yeah.
the wealth that's already in the area. That's also what we consider when we're buying into a location, especially
Okay.
if it's to leave it.
Hot tip coming up. If you are looking to buy property and you're like, crap, these guys have talked about so many good areas, I don't know where to buy. What you want to do is look at the suburbs that have a large population of owner-occupiers. Those suburbs will be the suburbs that tend to outperform all the other suburbs.
100%. All right, so complete this sentence for me, yeah? If you buy X type of property in 2025, you'll regret it by 2028. And why?
By 2028, you said?
By 2028,
You'll regret it
yeah.
by a unit in Melbourne.
Why is that?
I don't think the market will rebound by then. I could be very wrong. I'm not a Melbourne expert market. When we talk about the Melbourne market, I'm pretty much like everybody listening. When we talk about Brisbane, yeah, I know, but yeah, Melbourne's not my thing. But I do not believe the Melbourne market will rebound by then to have significant gains.
That's actually a great point. And the reason why I love the fact that you answered it out that way is, yes, number one, we don't have a crystal ball. Number two, you would have seen over the past 5 years that there's been negative talks about Docklands. That's a suburb in Melbourne CBD. Essentially, for those that don't know what Docklands is Melbourne's Barangaroo, is Melbourne's version of, what do you have here that's waterfront in Brisbane? Do you even have any waterfront there? But anyway, so
Crazy.
Docklands is direct equivalent to Barangaroo in Sydney by everything, right? Now, over the past 5 years, every media outlet, including some, property influencers, have been calling it out as a quiet city, a dead zone, no growth whatsoever. But guess what's happened over the past 12 months? Quietly, most apartments have gone up by more than 100 grand. We're selling townhouses that are complete right now on the water, direct access to the water, for about $10 million in the Docklands. So that's one suburb you want to look out for if you're choosing where to buy your next apartment. Definitely Docklands will give you really good returns quite fast. Yes, there is a supply issue right now, but how long can that run for? You're building on the water. They have to make the land to build on in the water for them to build these apartments they're building now. So already there's not much land and it can only last for so long. So definitely Docklands is a place to look out for. Now, my version of that is probably buying an apartment in an area like Werribee or Tarnay. Mostly houses, about 90% of them. And then you've got more than just about 10% townhouses. Why would you buy an apartment there? You'll definitely regret it by 2028, for sure. Right, next one. What's the best advice you've ever received?
In my life or real estate based?
Give me 2 answers. One
Okay,
in
cool.
your life and a real estate advice.
I actually hate these questions in terms of the best advice I've received, not because it's a bad question, but because so many people in my life, and the reason I'm even sitting here today, I'm able to even have the conversation with you, is off the back of me following advice that I've been given by some really, really good people in my life. So it's really hard to nail it down. I've dropped different pieces of advice in this conversation that I've been given and just passed it forwards. I think one good piece of advice that I received recently, it's not the best piece of advice I ever got, but I went to Ray White Awards, was just talking to, a fellow agent there, and he was telling me, man, some people might not understand why you've made the decision to go sell in Redbank Plains and all that kind of stuff, because, you've gone from selling in a city to now selling in Redbank Plains. Like most people who sell in Redbank Plains are dreaming of selling in a city. Why the hell would you go and sell in Redbank Plains? And I said, yeah. He said, but I understand. I sell in Caboolture. And the people you interact with, the way you can be is you can just be yourself. You can build up a relationship with your clients and all that kind of stuff.
True.
And so he said, my advice to you would be just remember through all of this, when people say, why have you done this? Why have you done that? Just be yourself. And so that was a really good piece of life advice, but really it was good real estate advice, because sometimes, when you're working with clients, you would know this as well. Sometimes it can be hard to just be yourself because you're trying so hard to help them. But then sometimes, they need to see something in a particular way to really take it on board.
That's true.
And you may lose sight of yourself a little bit.
That's true.
Him just reminding me, man, the thing that these people are going to love about you in Redbank Plains is just that you're yourself, that you're not trying to be I'm an inner city real estate agent, I look suave, I've got a nice this and nice that.
Swag and the
you know what I
titles.
mean? Yeah, you're just being yourself. That's one thing that will resonate. So that was really good real estate advice. I think really good life advice that I've got is kind of what I was talking about before, is one, don't chase the shiny toys. Just more opportunities will come. We talked about my patience before when we were talking about building and all that kind of stuff. And if we're talking about something that I struggle with in my life, sometimes it is being patient enough in terms of in my personal life.
We want it all.
You want it all, right? We're young, we're driven, etc. So you want to do this, you want to do that, whatever. And it's funny because somewhat a juxtaposition where you have to be patient to get where you want to go, but you also have to seize opportunities. And so the balance can be hard. So piece of life advice that really helped me with all of that, not just being patient, whatever, is work harder on yourself than you do on your job.
100%. I do 100% agree with that. And I'll tell you what, that's probably one of the best good pieces of advice I've ever heard anyone being given, or even being given myself. I really agree with that.
Yeah.
That's top notch. All right.
Oh, yeah. Tell me the best piece of advice that you've got in your life.
I think one of the best pieces of advice that I've received my whole life, it didn't come from a role model. It came from someone that a lot of people would look at and be like, you're no one's role model. So don't judge where I got the advice from, but judge the actual advice itself. And
I love that.
if you didn't know, I just turned 30 a day ago. Yesterday, I turned 30.
Well, I did know that.
And the best part of my 20s,
They don't know that. Yeah.
I live by this, because what he said to me was, in your 20s, the whole point, man, whether you start a business or not, whether you become a successful entrepreneur or not, that doesn't matter. Doesn't matter what you achieve in your 20s. But the best thing you achieve in your 20s right now is understanding what you like and what you don't.
Yeah.
Spend most of your time figuring that in your 20s, because it's going to be meaningful in your 30s. Good thing he gave me that advice when I was 23. And that was my mission the whole time from 23 to 27. I was just trying to figure myself out. Like, what do I like? Do I even like hanging out with people that much? Or I'm just a stay-at-home person?
Yeah.
Do I even like drinking? Do I like partying? I don't. And it made me realize a whole lot of things I did out of me trying to fit in.
Yep.
And a whole lot of things I did trying to please other people.
Yep.
I just realized, okay, I don't enjoy these things. I'm just not going to do it. If I'm doing it, I know I've made a conscious decision to do it, whether or not it's not going to make me happy. But it also helped me become less selfish. I started considering people when I started realizing I'm actually not doing this for me. I'm doing it for you. So I became more considerate, more understanding of people, but more understanding of myself, who I really am, what I enjoy. And the second best piece of advice he just gave me last night, randomly, he called me again and he said, do you realize that a lot of us don't know who we are outside of what our job description is or what our job title is?
Yeah.
And that's very true. So that's something I have to figure out for the next 10 years is, who am I outside of being the property guy? Because when I'm at work, I'm the boss there. When I'm at home, I'm a fiance. I mean, I'm the husband there. You know what I mean? When I'm with my nephews and nieces, I'm the uncle. When I am, depending on what I am, that's who I am at that point in time. But now I need to learn more about who am I outside of these roles that I am to everyone else. Who am I to myself? And I think that's the second best advice that I've received from everyone, from anyone, is figure out who you are outside of the job description, but know what you like and know what you don't like. Therefore, you say no consciously and you say yes consciously as well.
I really love that. I'm really glad I asked you that question, simply because that answer is phenomenal. If you really think about what you've just said there, it's, yes, you can want to be successful and all that kind of stuff in your 20s, but your life isn't over in your 20s. It's really just beginning.
It's just getting started.
So if you get the foundations of who you are and you figure that out, that means with your 30s, you can attack with more vigor simply because you know who you are now and you're no longer ailed or held back by those things of, okay, I want to be this, but I also want to be cool with my friends. Okay, I want to be this, but you can really go, no. If people aren't coming with me, that's fine because I know this is what I want and this is who I want to be. So that's actually really amazing.
That's it. Well, ladies and gentlemen, we've come to the end of this episode. I do believe there were some gold gems that were shared in here. I personally learned a lot from just hanging out with Mecca for the past 2 hours that we've been shooting this. Now, if you want to get in contact with me, if you're looking for any real estate advice on where to buy and you need a buyer's agent in your corner, that's going to take time to understand you and your goals and take time to find you the ideal property. I suggest you follow me on all socials. It's David Muchacha on all socials. If you're looking for a company, it's called David Willards Group on all socials. However, my personal mobile number, and this is the phone I carry with me all the time, is 0414 012 094. If you have any questions whatsoever, either follow me on socials and ask me there or give me a call on that number. Emeka, over to you.
Thank you guys so much for tuning in. I thought that was a really good conversation. I think we should actually have another one, to be honest, in the future. But that was really enjoyable for me. So thank you so much for engaging with me on that level. If you guys have any questions, feel free to hit me up as well. Emeka Onyike, Nigerian, lives here in Redbank Plains, in Brisbane. I've sold all over Brisbane, whether it's Moreton Bay, right down to, Logan Lee, Ipswich Ways, etc. So if you have any property needs or questions, etc., just feel free to hit me up. Most of my information is on my Insta, which is just first name, last name, _ Ray White or something like that. And then my phone number is 0403 615 384. Cheers, guys.
Thank you.